this one, we're talking about my last video, the plays that we were talking about getting into and buying the dip on, as well as some other things going on in the market. So we did have a pretty green day out there, which was nice to see. However, I was concerned this morning based on the low volume in the market. So I did post this morning in my Patreon around 7:20 a.m. And as you can see, the volume on QQQ and SPY were very low. And most of the stocks that you would click on and go look at the volume to average volume was very low, which was a bit concerning. I thought it was a bit of a fake out. But as the day went on and into close, we did see the volume pick up. And we actually saw the small cap stocks volume pick up higher than the average volume. All right, so like we just said, the volume this morning was very low. And I thought it was going to be a fake out. But later into the day, the volume started picking up heavily. And if you look at most small cap stocks, especially something like Skills, you can see the volume today was much higher than the average volume. And that was one of the plays that we have been talking about, especially in the Discord. It was heavily oversold and it really pumped back up today. But the dark pools we're buying today, this is the big institutional investors. You can go to Squeeze Metrics and check this out. You can see when they're buying and when they're not. But the reason people are speculating that the small cap stocks are going to come back into rotation, which I do think they will as well, is due to this new SEC rule. So basically, this rule says that tomorrow a new SEC rule kicks in that stipulates short sellers can't short stocks without having the cash in their account to cover. And this could be them covering to meet these SEC requirements starting tomorrow. So maybe that's why we saw this volume spike later into the day, especially on a lot of these SPACs and small cap stocks that have been so heavily shorted. All right, now we're going over the plays we spoke about in the last video. We were talking about getting into some leaps. However, today the market just went on a tear. So I didn't do any moves today, didn't buy anything. And as you can see, Skills, the volume today, 91.63 million versus an average volume of 17 million. So that is a lot of volume to push the stock higher, which is exactly what Skills needed. They sold off pretty heavily. The bottom for Skills was around 12.50, so something to keep in mind. Now, we could see some more selling, profit taking later on in the week. That could be a good thing, if you didn't get to pick anything up this week during the sell-off. But there are quite a few awesome opportunities out there, especially heading into earnings in May, and we're going to go over that in a second. Next up, we have Open Door, and this one had a great day, so up about 11.37% and a little bit after hours. This one bottomed out around 16.30, so we did see a huge sell-off over the recent weeks, and we know ARK has been buying this one. I think it's a solid company, and I haven't seen it this low in a long time. The average volume is 13.36 million, and today we saw a huge boost in that, so 20.82 million in volume. Then we have Desktop Metal, another one that's been heavily oversold, and the volume was up about double the average volume. Same for Tattooed Chef, just above the average volume at 3.29 million. This was one that I am looking to add leaps on. However, with the pump today, I didn't make any moves, so hopefully we do get some profit taking. And I still think all these are in great buy zones. The risk is limited now. But you just have to be patient with these plays. And then Palantir actually didn't meet the average volume today. It was a bit below that, but this is one that I still think is great. Under 23 bucks, if you're in it for the long term, I think that's a good buy. And now something that all these have in common, what I'm getting into, let's talk about. All right, so what all of these plays have in common is they all have earnings coming up in early May. So Skills is available May 4th after hours. Palantir is expected May 4th pre-market. Tattooed Chef is expected May 6th after hours. Open Door is available May 11th after hours. And then Butterfly Network is another one expected May 13th after hours. So the expected ones, I'm not sure if those are set in stone, but we know that Skills and Open Door are definitely coming up. Now, when you buy the dip on these, say you buy 100 shares, now you can sell covered calls on those, or you could do an in-the-money leaps and sell the poor man's covered call. But for this example, we're just going to pretend that you bought 100 shares of the stock, and now you can sell a covered call and collect premium. The reason why earnings is so important is because it's very volatile. So the implied volatility increases heavily, and when you are the buyer of options around earnings, it's pretty much like going to the casino because everything needs to go in your direction to avoid getting IV crushed. So you really want to be the seller of the options. You have a much better chance of making money and even keeping your shares in hopes that the buyer gets IV crushed. So by selling a covered call, you're going to make money no matter what. Either you're going to collect that premium and the contract will expire worthless, or Open Door is going to recover and you're going to end up getting your shares called away if the option buyer decided to exercise that contract and take your shares from you. So basically, as long as you buy and sell above your average cost, you're going to make money. Biggest risk is if Open Door did something crazy and went back to something like $30, $25, and you sold a 22 strike. So you're just going to miss out on the rest of the upside. However, close to earnings, plus if they end up recovering nicely, this contract premium will continue to increase. So you could sell something like the 22, 24 strike, whatever you wanted to do around earnings time, as long as it's above your average cost, and collect that premium and see how things play out. But I do expect Open Door to continue to head higher and all of this premium to increase, as well as implied volatility. So, that's my plan right now. Add these stocks that are heavily oversold, and then, be the casino and sell these options. So although we did pump today, we could see some more blood and, profit taking in the weeks to come. I'm not saying we're out of this and things are just going to magically recover. This could take some time. But if you do pick up shares or leaps on the next red day and sell covered calls, I think that's a great way to make money in this current market where things have just been bouncing around or selling off. And it's been pretty frustrating, but at least you can still make money instead of trying to trade options and swing stocks, end up losing money that way. So I think that's a great way to go about things right now. And I was watching CNBC this morning, and they said like this is the most amount of money to flow out of the stock market since November of 2020. So that's what we're dealing with right now. We're just pretty much waiting for those institutions to start buying back in, which is what I think they're planning on doing. They shorted all these stocks, making money on the way down. Now they're planning on making money on the way up and getting some steals on these stocks. So that's what we're waiting for. Wall Street's the one who's going to bring these back to life and push things back up. Retail traders have been buying and they've been selling. That's pretty much the way things are going. So just remain patient, pick your favorite stocks, and continue to scale in, buy in waves, but always keep some buying power. Never go all in at once. So that's pretty much it, guys. Hope you enjoyed the video. These are the strategies that I am using to continue to still make money and be successful in the market during these tough times. I know it's been pretty frustrating out there, and this is not the most enjoyable market, but hang in there, keep buying your favorite stocks, and things will eventually bounce back and get better. If you enjoyed the video, please give it a like and hit subscribe, and have a good one.